All right, take two. A couple of sort of issues with the microphone there, but I'm back and just took a little bit of a week hiatus of doing the individual sort of daily analysis videos. Of course, always in touch with the markets, keeping an eye on things. I mean, that never stops, and then I mean, you stop with that, and then you're sort of behind the curve. Takes you 2 or 3 weeks to come back. So, look, what a wild week. Where we are, 12 o'clock. So, technically, well, I suppose actually technically in the afternoon now, but. As I said, this is the second go, so I was like, yep, Saturday morning. Better time to get this sort of stuff done instead of sort of 1 o'clock on a sort of Sunday night on Monday morning. But look, main thing is that we obviously get it done sort of prior to markets opening. Gives us a chance to sort of see what's happened towards the end of the week. Obviously, NFP last night. A few little sort of I don't know what you want to call them, sideshow kind of things going on. Musk and Trump sort of having a whinge at each other. Not that it sort of overly directly affects us, but you know these things are happening, and it has affected some parts of the market, so it's worth noting these kind of things. So look, I'll sort of start off couple of things in that. First of all was NFP because this is just the overnight news and that, and we had sort of a little bit stronger than expected data. So I think sort of like the fact that it was stronger than expected, okay, that's obviously a little bit positive. Numbers not too bad in the scheme of things. You know, I mean, obviously we've seen higher numbers here. It's actually in saying that, it's actually lowest that we've seen for a while now that I actually sort of call this up in the last 5 months. Yeah, go back down. So look, it is on the lower side of things, but I think the main sort of thing with this, or the takeaway with this at the moment, is that it's not horrendously bad. I think the market was really sort of planning for some shocking data to go along with, you know, ADP kind of thing, and that sort of big miss because, you know, remember on Wednesday night, was it Wednesday night, Thursday morning? I think that's pretty much when we see the ADP. If I can find where we are here, yeah. So Wednesday night, 37,000. Like that's shocking, and like obviously that's a massive miss to the downside. But you know, a couple of years ago, that people were sort of saying, oh, you know, this is a good precursor. This is a shocking precursor for, or to give an idea about sort of what's going to happen with NFP. So look, it's just one of those things. You've got a weak number here. You know, you've seen unemployment claims up a little bit. So here, this has been creeping up the last couple of months. Like, not again, not massively, but you know, 20s, 20s, 20s. And now we're up to sort of 40, 47 for the last two prints now. You know, so that sort of climbing up, creeping up a little bit. And I think the market was expecting like a shocking number. And so the fact that it wasn't like didn't come in as expected or obviously lower and actually bucked the trend. It's not like, okay, wow, we've got 200,000, it's pumping along. It's just it's not dying. And this is that sort of gray area kind of thing, bits with data. Look, the market didn't mind it. It sort of bounced a little bit off it. But it's kind of like one of those things, like, as I saw, it's not a super number compared to what, you know, we've seen for, you know, quite a while, but it's not super bad. So it's like sort of when, you know, earnings come out for a company and you know, they're expected to be bad and they come out marginally not as bad kind of thing, if that makes sense. It's sort of like it's in that sort of negative kind of direction ish. Well, it's a bit hard because obviously it's not in a negative direction, but it's down the lower end of the scale, but it's not as bad as they were expecting. So that's kind of almost like a positive, as in the market was pricing for, you know, 60,000 or some sort of shocking number there. Um, so that gave a little bit of a reprieve. I don't look so much along the sort of hourly earnings, but again, it's just another one that's sort of like month on month that's up. And again, I guess the hourly earnings more, you know, if that's increasing, well, people got more money, then they can get out there and spend. If they can get out there and spend, they can push GDP, these kind of things, and stronger GDP, obviously positive number. So this isn't sort of like the thing that's going to like change the market, certainly when it's stacked up against the NFP, but it's just another thing that we sort of plug in there as well. So seemingly positive data here. This is revised down 30,000 from last month. So again, that sort of counters. It takes a little bit of a shine off this sort of number here as well, or the reaction, I should say, from that sort of number as well. Just quickly going through bits of data in the week because obviously I didn't sort of catch up with these sort of throughout the days. We were looking, it was quite a heavy sort of data week in that, but we had a couple of bits with Aussie particularly, and that's the only point that I'm really going to make here with it all. We had sort of obviously weak US data here, and this is the thing through this week, so I'm saying about 8 things at once, but US data weak at the moment. the market is absolutely punishing DXY4. Like they will just, it's like, oh, it's missed, bang, they'll sell it off. Oh, it's missed a little bit, bang, they'll sell it off. And that's why, they're championing the idea of having something that's not so bad because it's not yet just another reason to sort of sell it off. And I'll get to that with the charts and that in a moment because it's held a pretty important level for the third week as well, which I've sort of been calling out. Um, so yeah, the Aussie data, look, we've seen a slowdown. GDP sort of, it was expected to slow down even more. So that's obviously a weak bit of data there. We had the minutes flying all over the place here. The minutes came out where they were sort of considering, 50 base point cut potentially, which obviously is dovish. And I think we had another bit of Aussie data out, did we? Look, I can't find it off the bat here. Actually, give me one sec. Scrolling up and down, sort of saving sort of 10 minutes as I look for this in. But the trade balance, this is the other Aussie bit of data that we had coming out. So, weaker GDP, trade balance down, talking 50 base point cuts. Aussie does not care at the moment. And this is what I've said for quite a while, and that Aussie really derives its moves more based off what the market's doing as a broad sense with the US dollar as to what our homegrown sort of data is, because that's three bits of negative bit of data there for Aussie. And Aussie actually finished the week relatively strong and almost tested for a breakout. It did sort of cool off into the end, and it's in sort of double top territory. But we'll see how we go with that. So anyway, that's a little bit of a wrap up of that sort of data that we saw through the week. Also had ECB who cut, and I think they're sort of saying that they might sort of be sitting a little bit more after that one now. So if we have a quick squiz through what we're sort of looking at data-wise for this upcoming week, second week of June, we've got the bank holiday. So this is the King's birthday on the Monday. So a little bit of a slower Asia session, perhaps. Apart from that, we've got a bit of China data coming out. It's looking to slow down a little bit there. I'll get to the one, obviously, in a bit as well. So yeah, PPI, producer price index, CPI, consumer price index. It's interesting when you see the deliverance of these bits of data like from country to country, as in everybody calls it CPI, PPI, that's fine, but like the timing of these things that come out. Obviously, these things are coming out together at the same time, and also just the different names for some of these things. But little things like that, kind of interesting. Look through Europe and that, you've got a lot of the holidays as well. What are they sort of got going over there? James Whitmunda, same thing. I guess it's the same thing. Yep. So anyway, so yeah, a couple of bank holidays to sort of start the week off. So Asia session could be a little bit on the quieter sort of leg. Look, it could, again, with these sort of things, when you've got the bank holidays, it can go one of two ways. It can really be, okay, well, there's no volume, market's just there, it's a little bit slower. Or if things are trending, there's a chance that they just keep on trending. So it's like if you see a break or something moving harder, there's a good chance that that'll just continue because the other side of the trade is not necessarily there to counter it, which means you may see a snapback on that Tuesday session when people start to come back to their desks as well. So it's just something to keep an idea with that. There's also got trade balance coming out, which is looking to, okay, tick up a little bit there. Okay, interesting. So yeah, trade balance looking to sort of tick up there a little bit as well for China. Apart from that, not really too much. Nothing going on through Europe and nothing going on through the US. We've got some bit of consumer sentiment sort of with Aussie here. It's coming back from a shocking -6 over here. I think I said this maybe last week as well, but always interesting with these sort of outlier numbers. What's caused you to go from these seemingly average numbers to then spike up, then to sort of hardly. I suppose if this was a bit of a spike up for whatever reason it was, the -6% kind of just brings it back down because it's -6 measured month against month kind of thing. So it's not sort of like massive swings, but still, again, interesting. See how this sort of comes. In theory, it's a positive move. So we'll see if that sort of gives reason to Aussie to sort of push on a little bit more. Got business confidence. Again, not massive bits of data for it all. That's about it through Asia. Going through Europe, again, not much. Going through US, not too much. So I guess up until Wednesday, we don't really have any major US data where we got the CPI coming in. So year on year is looking to tick up, actually month on month flat, and the core looking to tick up. This is something to keep in mind because there was some sort of talk this week of the Fed potentially turning a little bit more dovish. But if you see some CPI numbers that are actually moving up, that's going to give reason to give US dollar a little bit more of a sort of a boost. Um, Basically, but obviously just with the idea they don't want like it's all very well to sort of be balancing the recession and all this kind of stuff. But if CPI sort of comes out, I think if you've got the worst choice of the two, people hate inflation. But it's the dual mandate of inflation, recession kind of sort of attitude towards it all. You don't want the economy to slow down, but you can't have inflation just go out of control just for the sake of bolstering a couple of these companies and businesses to sort of keep ticking on. And I guess that sort of puts them in these positions of sort of stagflation as well, because it's, what I mean, inflation up and, not really doing a great lot of sort of productivity. So if they have weaker data, but again, that NFP beating and not being as bad means that, hold on, wait, maybe we don't need to consider that as much, and not that it was a super number, so you don't need to disregard it, but it just sort of brings it back down a little bit. And maybe if CPI is coming up, maybe this can start to change the narrative a little bit. And certainly if you get CPI talk of, oh, it's going higher, well, how do they combat that? Well, they don't cut rates, put it that way. So they'd be holding the rates. And if they're going to hold the rates, again, it's not hiking, but it's not moving in that more dovish cutting direction. So you could see US dollar strengthen potentially a little bit should these numbers come out like this. And obviously, the higher they come out, the more reason they are to sort of hold, which again will strengthen US dollar a little bit. Moving forward, we've got GDP in UK slowing down a little bit here. Then we've got PPI coming out. I suppose they're closer, day after day. So I was just saying how China sort of do them at the same point. But anyway, PPI, so the producer side of things. Now these are looking more decent, significant sort of jumps up. This is Thursday we're up to already here. So it's a pretty light sort of news week in that, but obviously then it comes bang, 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 3 days in a row with the US data. PPI, we're seeing a bit more of a jump up here. And as I said, PPI, that's up the stream. So that's producers, the price index. So if they're paying more for their things and inflation's going up here and they've got to pay more for the materials that they use to manufacture and make it, well, that's going to be passed down, which then can lead to the consumer, which can lead to the consumer consumer price index, inflation for the consumer CPI, that can lead to that sort of moving up, which is obviously the one that they look at as well. So again, data looking and pointing in the direction that would lead to more of a hawkishy kind of stance from the Fed, which in turn would be strength for the US dollar there. Interesting. And then we've got the consumer sentiment and inflation expectations. So you haven't got any sort of inflation expectations, and we've got no expectation here. So there's no idea of what we may be sort of getting to this. Maybe they'll fill this out sort of throughout the week. I don't think so. I'll just something to note on. But we are sort of seeing that consumer sentiment, this has already been revised up a little bit, and they're expecting that to tick up just a scratch as well, even if that were to be the correct number from last time, 50.8, coming into 52.5. So it is looking to, so again, as long as people are a little bit happier and they're not sort of panic stations, well, the Fed doesn't need to act. And by act, I mean cut rates. So again, something a little bit more in that sort of more hawkish camp. So main sort of ones coming towards the end of the week is pretty quiet up until Wednesday. And then we've got 3 big bits of data, nothing really coming out of Australia, but mainly the US data. And it's all sort of 3 parts sort of ticking in a bit more of a hawkish tone. All right, with that, let's jump on to the charts. So we'll have DXY. So it's getting almost to the point I need to sort of clear these charts up a bit because they obviously tell a story as you're going, but it does make it inherently difficult to see these things at a glance and that. I use about 5 different charts and that on a couple of different platforms. So sometimes you just move to the other one just because it's a little bit clearer. But let's get rid of some of this stuff. So this was the thought that I had sort of through the week. These were the 2 zones I was looking at, and I was like, look, up bang here. I really thought we would probably lean more into this side of the camp. Obviously, we didn't. Boom, 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 and back down here. So this played out to the downside here. It wasn't really my sort of outlook, so it wasn't anything spectacular for me. But let's get these out of here so we can clear this stuff up. I'll unpack this stuff just as we do it because may as well. That was that little double bottom we had. That's fine. So pullbacks here. I completed that pullback. And so we can get rid of this one for now. And this coming down here, as we can see, just a little, this is a good example of, just while we're doing this, this is a good example of a 38% pullback. We're selling down 38% into a zone that we've already got sort of marked out, attacks the lows, breaks down, cycle starts again. But we have sort of come back, resistance, comes back down, tackles that low for the thing, and it actually held. Yeah, we got this little spike down here afterwards, but this is the reason that we could potentially be seeing some sort of turnaround, which I'll get to in a moment. But this just is a good example of what I sort of go on about each week, where you move down, find support, find resistance, resistance at a previous level, you tackle. So this is the third leg. Tackle the lows, tried to hold it, but it broke through. Find support, starts again. So this leg is now this leg here. You move up till you find resistance. You move across, you move back down, you tackle the lows. And this is generally how this will always happen. And what we've seen here is this time unable to get through, so we've actually got a double bottom. So this leads us, and this is an early indicator that we might be getting a little bit more of a range balancing around this area. Obviously, we did sort of come down here with a little spike down, but as you see, this is pretty much a stop run. If you get into a lower lower time frame, that you see it sort of bounce up very quickly. So now the emphasis is back on coming up to the top side. As you can see, we've sort of come back up here. We've found resistance at the same area where we had previously. So it's not out of the woods yet. We can very much sort of see this kind of thing, this happen. It could still break down, like, don't get me wrong. But the thing is, it's sort of like what it's started to do now, obviously down, 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 we're starting to see a bit more of a sideways. So a bit more of a sort of a larger range start to form down here. And it's closed right up the top of the range, as you can see. So the potential, I mean, you can see, like if you just sort of do it very basically, we're moving this way, now we're moving this way. It doesn't mean that we can't go down here. Whoops. Doesn't mean we can't go down here. But the first step to sort of going back up is to stop this kind of direction, which is what we have seen now. Let's get some of all this. Whoops. Keep that range on there. Let's get rid of these. So it has sort of found itself a little bit of a base at the moment, and I'll jump onto a higher time frame in a moment. I'll just like keep clearing a bit of this stuff off. Look, we can always put it back in. So that's for that. This is the sell down here. So as you can see, it's pretty much 100% undone that move. Let's get rid of that. And we can keep that because that's a larger kind of time frame. All right, a little bit cleaner. Cool. So if we sort of unpack kind of where we're at the moment. So there was a couple of little indicators that I was looking at, sort of coming in particularly to the end of the week. Negative divergence, which we can see if we drag this one across here, bang, from this low down to this low over here. So negative divergence, obviously buying pressure coming in here, and this as it spiked down. And this is why I was saying that this is almost a little bit of a stop run, because that's on a 4-hour. If you have a look at this on the 15-minute, look at this, bang, and then just straight back up to where it was, completely V-shape, undid that move, dragged along, and then obviously dribbled up through the end of the week. So negative divergence played out here, back up into this kind of resistance zone. We can almost drag this down just a little bit here and sort of see that, you know, this is potential for obviously a range should this start to sort of move back down here. And then we can look for sort of, you know, either to sort of continue the range, obviously close out the bottom would signify that we'd be moving down lower. Or we could look that it did actually close on somewhat of a positive note. It was unable to sort of really break out. And as I said, that data that came out on Friday night, the NFP, was good in the sense that, you know, it beat expectations. But it wasn't a spectacular number. It wasn't sort of like, oh my God, wow, we put out 250 jobs, 250,000 jobs, and or 400 jobs, or whatever, and it's like powered up over here. So you did see a reaction, but if you have a look on a lower time frame, it was very choppy. Like this is where the data actually dropped and moved up, moved down, and then sort of broke up to the top, and then sort of soon. So there's still a lot of sort of people sort of going, oh, I'm not quite sure about this. Whoops, let's just do this. Nah, you know what? I'm not gonna trade with that because one, we're on a 15-minute time frame, and two, it's end of the week. And it, point is, this is obviously just look, it is moving in a positive direction, as you can see, up to the top of where we've called the top of this range, but the market's still hesitant because there's a lot of other bits and pieces going on. But all in all, it wasn't bad. So if it was a shock, excuse me, if it was a shocking number, there's a good chance we would have tested out the bottom here. But because it beat expectations, we closed up towards the top. Let's get back onto a better time frame. So what we're kind of looking for on Monday, as I said, it's a little bit quiet sort of through the week. I think the fact that it failed to break out, like it did sort of close fairly positively. You got a negative divergence on a 4 hour, so you can expect a reasonable return on that. So all these negative divergences are really, you got to sort of take it. If you're doing a negative divergence on a 15-minute, it's not going to turn around for 3 days. And likewise, if you're doing something negative divergence on a daily, it's not going to sort of peter out in an hour or two. But being on a 4 hour, you can expect a little bit of a response. And as you can see, all in all, from low to high, it got it up 1%, which isn't too bad, a sort of little reaction. The fact that it failed to actually commit and close out to the top side makes me cautious that you may see this just really sort of push back down here. But I don't think we're going to be coming back down here because, as I said, you've got those 3 bits of data coming out this week, and the NFP beat expectations. I think there's a possible chance that we do get a little bit of a squeeze. So an early sort of move down, possibly in Asia Monday, based on the fact that was unable to break out. I think you see a couple of people sort of pile in and sort of go, okay, you know what, failed to break out. Well, uh, that's it. It wasn't enough, and we're going to see a range play. I think if we do see a little bit of a sell down early in Asia, and say we see the buyers step in around, say, this zone here, and then sort of tackle and then break the highs, I think that's going to be indicated that we're probably going to be moving a little bit higher. So I'm just going to put this above it. Look, I'll put it above this wick over here, opposed to this one, purely just for the fact of, look, this is what I'm calling the range. Technically, this candle's inside what we are calling the range and high. You want to break that sort of Friday high, but it's a couple of cents. Let's say this. Say this is a higher high outside the range. So if we see an early push down and then sort of buyers hold it without allowing it to come back down to the bottom over here, if it comes back down over here, well, obviously it puts the pressure on the idea that you might move out here, but really you'd probably be looking more for a range to continue through here. So if we see the buyer step in, and this isn't exactly at this point, this could be, this could be potentially like, I can't select this thing. There we go. This could be, say, previous highs here, because we know that the market's still pretty keen to sell US dollar. And yeah, look, the data wasn't shocking, but it wasn't outstanding. If it was outstanding, you get the breakout. If you get something like we did, where we sort of saw that it was kind of like not as bad as expected, well, there's the reaction. People sort of may have been positioned for sort of shocking numbers. Well, they just peel back a little bit of those positions. It doesn't mean that, okay, wow, it's a big turnaround story yet. But this is the point, that we look at the data that's potentially coming out this week, and we've got 3 bits of data that are looking more in a hawkish kind of response sort of side of things. So if we see a little bit of a sell down, you may see the market potentially position for some sort of positive data, positive US strength data. And if we see this happen, so the buyers sort of come down, like if we see it sort of pull down early because of the failed breakout, and then we see buyers step in, a break above this little range down here, I think sort of leads more to sort of like potentially a bit of a squeeze up higher. And if those bits of data do come in hot, well, that's just going to add to the whole idea that it could be pushing up here, because you've got to think, then you've got the two segments of the market. It's got the two things that it's running on. So let's just do one of this. So it's this and this. So it's very simplistic stuff, yes, but whatever. Well, actually, we'll see. Whatever. Here for the numbers, not the words. So look, if we sort of see that, okay, potentially everybody's expecting slowdown with numbers and all this kind of stuff. So as the numbers are saying, okay, look, we're seeing a slowing, GDP. If we saw NFP numbers, so economy's looking weak because they're not adding the jobs on. Well, that gives the idea that you're pushing down like this. The fact that that didn't happen, we actually got a stronger number, doesn't make it like big candle like this, but it means that it's not pointing in the down direction. So it's okay. Recession, just based off, this is a very basic outlook, of course, based off the idea that the NFP was a little bit stronger. Okay, so it alleviates the idea of the immediate sort of thought of, okay, hey, we're having a recession. If we see the CPI potentially pushing up, the numbers pushing up, the response from the Fed would be more of the hawkish side of things, which again is more of a tick to the top side there. Again, this is a very, very basic thing. It's just consider this the two dual mandates of what they're trying to sort of achieve. And CPI, potentially, if we see those numbers come in a little bit hotter, well, that's another reason that you could see things move up a little bit. So I think that's just a very, very basic idea of what we're sort of looking at. So early in the session in the week, if we see sort of buyers hold a zone without allowing it to come back down to the bottom here, if we see them move up their bid over to here, this is the time we take out those wick highs outside the range. I think that could lead to a little bit of a move higher. If we see the CPI come in warmer and a couple of these other bits of data more on the hawkish sort of side, and maybe consumer sentiment is up a little bit. And what else do we have coming out here as well? PPI. So we've got PPI. If that sort of comes in a little bit hotter as well, so CPI, PPI, let's just call it inflation. Um, that is, that is a reason that you could possibly see the market position and then enact a little bit there. Because if you're not seeing the numbers fall off, that alleviates the idea of recession, which would require the Fed to have a bit more of a dovish outlook. And then if you have the CPI coming in potentially a little bit hotter, well, then they need to sort of think, okay, we can't cut, so we need to hold. That's another reason for them to have a bit more of a hawkish outlook. So it does sort of seem like it could be lining up. You just need these technicals to sort of confirm. Even if it does get a break up here, there's lots of levels for it to sort of come to break through, but we take it one level at a time, and this is how I'm sort of looking at it sort of come the week. Flip side of this is that they allow it to just go back all the way down here, and if we see that, well, then we're probably looking at potentially just a range through the side here. And if the CPI comes in cooler and they've got it wrong, you may see things balance out and sort of continue in this lower area here. But as we're seeing it at the moment, market expectations are for hotter numbers, which would be more positioning for the top side for the US dollar. And we took across, we got Aussie. So Aussie, as I said, it actually sort of closed a little bit weaker down here, but we just saw, it just actually held up quite well through that period. Like it did sort of position itself down a little bit, sort of coming into this print. But now we're potentially seeing a double top at 65. And this is what I've been sort of saying, like how many times can this thing, like where's 65 here? This on here, where's it? Boom, here. There's 65, right? So 1, 2, 3, 4, if you want to call this 4, 5, 6, 7, 8, whatever, 5 times above 65. and it's unable to sort of get back down. But the thing is, if you're looking long with Aussie, it's clearly in an uptrend in this period through here, albeit very, very, very cautiously. And that's because Aussie data is not spectacular. If Aussie data was better and US dollar is on its knees, as we've seen, Aussie would be up over here, 66, 67. Like it would definitely have had this breakout over here. But the thing is, it's sort of like the only, like Aussie data, as we saw, was weak this week. And it's not just this week that we saw that stuff. There's not a lot of sort of stuff going on homegrown wise or local data, which is sort of, hey, yeah, wow, Aussie's like kicking along. Metal's doing better. That's something for it. I'll give you that. But in terms of sort of like actual sort of local data, it's not spectacular. The only thing that's really been keeping this thing elevated is US dollar strength. And this is why it's important to be paying attention to, obviously it's not part of the DXY, but what the market's doing with US dollar on a broad sense, because if the market keeps buying, if the market starts buying US dollar and they're already not buying, they're only sort of staying up because US dollar's weak. Well, when US dollar isn't weak, plus you've got no reason to be buying Aussie because there's nothing good on the local front. I mean, it's incredibly dovish outlook. And if if the market starts buying US dollar, plus you got a dovish RBA, that leads to this move down here. Maybe now we're just looking for this. That's the first move we're looking for. But, how many times can it get above 65 while being rejected? If we stand back a little bit and get onto the daily, you can see that it's like up into this zone, 61% retracement of that massive absolute abomination of a sell down that it had. But look, short of this little, I don't know, flare up, flare down, technically, isn't it? Short of this little thing, it has actually been grinding quite solidly. I mean, if you drag this all the way through here, I mean, this is just really rough kind of thing. It is moving up in an up direction. It just had this little whoop down like here. I've been wanting to buy it back down over here, and I still do if I can. But, the idea of that's getting less and less. But it's been very stubbornly strong, but absolute nightmare as it does sort of move up here. But as you can see, it is slowly moving in this upward direction. Now, it's up at the 61% retracement into this area where it's previously rejected from. So we got this zone marked out. That was a little bit of a support. This was just actually around. This was the support just prior to the election. So as you can see, the date down the bottom, 6th of November, 7th of November there. So this is where the election was happening. That was at support, and it's now the 61%. It was obviously resistance a couple of times before it completely melted down. It's tested it twice and failed. Now, it's hard to sort of get on the cap because it is moving up in this upward direction here. And this is why I'm sort of saying that, if you have US dollar start to break down, start to be bought up, you really don't have much of a reason to be buying Aussie or be long Aussie. And I know that's against the curve of everybody because everyone's like sort of thinking, oh, Aussie's going all the way up over here. But till you get some good data on the home front, plus you see US dollar break down towards the mid 90s, I think there's a good chance that we see more of this move. And I'm still going to maintain this sort of idea of a short position. Just purely for the fact that if it wanted to move up, it would have. It is slowly, yes, it's putting in higher lows. But I think there's more of an idea that we potentially get another little, maybe not get down to these big buy zones down here, unless we see some incredible 3-month squeeze on US dollar back to 104, 105, 106 or something. Maybe it sort of require more of that. But I do think there is potential for this thing to sort of come back down over here. This wasn't an overly sort of bearish kind of thing. Look, all in all, it did close the week fairly strong-ish. Well, let's have a look at the weekly. As you can see, fairly strong-ish, but again, unable to actually commit to that sort of breakout above that zone there. So I think it does sort of lead to the idea that we could potentially sort of see some cooling. We're pretty overbought. This is on the weekly. Pretty overbought here as well. We had a little bit of a negative divergence coming into that high, as you can see, marked out through here. And the negative divergence just coming in around 80 as well That really sort of sell off and push down here. But all in all, look, we saw US dollar or DXY sort of have a little bit of a sort of a push into the end of the week. Aussie just maintained. So, it is stubbornly strong, but if we see a continued push, because again, look, DXY didn't actually get the breakout. It just didn't die. And if it decides to range, then this could definitely push back up to the highs over here. Like they're happy to buy Aussie against a weak US dollar at any chance, but if they do start to sell off the US dollar, then there's a good chance that this will then start to sort of push down a little bit. And look, there's a bunch of levels of support through here. 64, mid 64s, 63, no, this is 64.10s. Yeah, 64.10s. So there's going to be a couple of areas. It's not going to be a straight shot down. But if we do see a bit of that data come out a bit stronger, more hawkish leaning for the US, Aussie's not going to be immune to that because they're not sort of doing so spectacularly on the home front to combat that kind of sort of potential strength of US dollar, even if it is just for a short period, a bit of a shakeout and then move up longer. But I think there's potential that we could see a little bit of a downside here. And I'll be looking sort of for these kind of levels to sort of see what happens. Should we sort of come through, particularly if we come through 64, I think that'll be the new sort of big level to sort of watch for the downside. Flip side with this, obviously, as I just said, if they decide to just range that US dollar, then I think Aussie was very much going to be just bang, okay, pushing up here and testing these highs. Onto gold. Gold didn't fare so well off the end of the week with the NFP. It jumped around a little bit, but obviously, as you can see, pretty much sort of succumbed to this downside. Once it sort of got down underneath, well, technically if it got down underneath 50, but as you can see, bit of support through here at 33.40. Once it took that out, then it kind of accelerated down a little bit, closing pretty much on its lows. Look, it is the top side of this sort of, top side of this previous falling resistance. So, there's a reason to potentially have a little bit of support and a bounce around here. I think certainly if it breaks down any lower, you're looking at that sort of like, 3280s kind of level. This is a bit of a breakout. Oh, you can't see it through all the scribble. Let's actually clean this up a little bit here as well. Let's get rid of some of this stuff. This was the call from last week, and that I was looking downside here, but I said above 33.40 that would be negated. 33.40, and then as you can see, we spent the whole week on this potential attempt for a breakout. But as you can see, this tried to sort of continue, failed, and now puts the emphasis back on the lower side. Now we're breaking back down over this way. So let's just unpack it a little bit. Let's get rid of some of the stuff just to clean it up a bit. Let's redraw it in. All right, so back down through this little zone over here. Didn't really give too much notice to that sort of 33.20s. It did a little bit actually at the time, sort of tried to hold it, but obviously then sort of closed down a little bit underneath. Pretty oversold on the 4 hour. Yeah, look, that 1 hour, the daily here does look like it's rolling over here. So look, I think this is definitely going to be the area that you're paying attention to underneath here. I think if you sort of come back down underneath, what are we looking at? 3280s. We can see this is a very solid straight line where the buyers are very keen to hold it on a daily. Yeah, you got the spike down, a little shakeout down here, but I think that's definitely going to be the area to keep an eye on because we've got this falling resistance. So it is in technical backtest area. So there's always the potential that this is just breakout, backtest, on higher like this. That's the top side. If you're a bull, you're probably sort of thinking this is a good buy opportunity. To me, it's overboard and it didn't quite even get up into that. Sorry, overboard. Didn't quite get up over there and it's already rolling over. To me, it's also, and this is the flip side of it, is a potential failed breakout because it took out these highs over here. It got this breakout over here, and this is what I'm saying. Once you got through here, a lot of people would be championing this idea of a flag breakout, and of course that leads to a very, very big breakout over the top side there. But the cracks started to show with this move when Xi and Trump had a phone call, and the market was very like I was watching it at the time. It was like bang, like equity spiked, US dollar dropped. Did it drop or did it spike? I think it spiked actually at that stage. Gold sort of dropped. It wasn't like a death blow, but it was like sort of 15, $20 in like a minute or something like this. So, fast. Like the market obviously reacted to that idea of that news. And I think they've actually sort of progressed a little bit further with that as well. So that is really sort of taking the idea of stream because remember, the main driver for gold at the moment is the tariffs. It's not the war. It doesn't care about the war. I mean, Ukraine, I won't bother really getting into it. I'll just say briefly, idiots. They're about to have these like peace talks with Russia, and then they're like, yeah, you know what? Let's bomb them. It's like, man, the guy's a moron. Like, you know what I mean? Like, it's not really conducive to sort of peace talks. So, like, I was listening to one guy, and he was like, mate, it's a show of strength. Show of strength. I mean, like, yeah, okay, show your strength, like, when people are going tit for tat. It's like okay, it's like sort of somebody, we're just about to shake hands, and I punch you in the face. It's like, what do you think? Oh, the person's not going to be like, oh, wow, yeah, you're so strong. They're just going to go, you really? I thought we were going to do it. Well, you got me, and I'm not going to trust you in the future. And there's a good chance that they sort of can retaliate and just it kicks on a little bit more. But anyway, that's that with Ukraine and Russia. Market doesn't care. Market doesn't give a shit about that. It hasn't for a long time. I've always said that. Well, for a long time I've said this and that. And Middle East situation definitely doesn't care. Doesn't factor into how gold's moving. So what's left? It's basically just the tariffs and the uncertainty around the market. And with Trump and China, like, because everybody's got the tariffs and all this kind of stuff, and we saw, particularly the last couple of weeks, the Friday nights, they've been going pretty heavy with, well, Trump's going pretty heavy with, here's a 50% tariff on these people, here's another one on this, and he pulled back one, and he kept the steel one as far as I saw. Um, but let's be honest, China's the big one. China's the one that people really care about because that's the big powerhouse. It's the two largest economies, sort of going to trade war kind of thing. And so if they can sort of calm that down a little bit, well, maybe there's not so much reason to hold gold at or near all-time highs. And if that we could see that sort of continue through the week or coming weeks, that could definitely lead to the idea of a push down lower, this sort of path. And look, I'm not saying it's going here. Again, as I said, you've got to consider both sides of the coin. This could just be a back test and move back up over here. This could also be, okay, and we tried to break out. The landscape changed a little bit because in this case, the landscape moving bit is the tariffs and ongoing tit for tat sort of trade stuff. If that's alleviated, well, maybe we take it off a little bit. You got to play out all the scenarios. If US dollar catches a bid, maybe that's another reason for this thing to come down a little bit. So it is stacking up in the idea that we could potentially see these things moving down a little bit more. I mean, of course, CPI could come in cool, US dollar could sell off, trade wars could sort of hit some, sort of roadblocks, whatever, so that it'd sort of push it back up. So it's not going down. It's not, okay, bang, we've got to see $200-300 come down in one go. But as these things start to progress and actually lock into place a little bit more, these things will sort of come off a little bit. Because remember, we've had all these incredible runs with gold. You know what I mean? There's a lot of profit on the table, and if we see another viable option for where people can make money, i.e., sort of potentially maybe a US dollar squeeze, or sort of run up for a month or two, maybe through the summer, well, this could definitely see metals cool off a little bit. It's just a thought to sort of play it out. As I said, could still go higher. I know it covers both sides, but I'd be leaning more in the idea that possibly we sort of at least come back down and test this 32 level. This is not a particularly bullish. You don't expect this closing on its lows like this, range, bang, breakdown. I'd look for this big candle to be undone. I'd say that's probably your first target, 32.90. See what happens here. We saw the market board it up here. They held this as a very strong, solid line. We can even see back over here if you carry this through. That's pretty much exactly the same level that we've seen the buyers try to hold over here. So I think sort of definitely you'll see a bit of a reaction here, but this is what I'll be looking for to sort of see what the market's going to do with it. Potentially bounce off here, but if we see a second push down, I think this could open up to a little bit more of a sort of larger move down, and then then we're looking at sort of 32 back down to 31.50s, 31.60s. So those two sort of levels down here, yeah, and then potentially 3200, yeah. Should we get that break under here? So the way I sort of play this out, this is the first target. You're going to see a reaction here. We've seen it how many times there are people that think it's going to 4,000 in this move. I'm not sort of saying, hey, it's not going to go to 4,000, but there are people that are saying it's going to go to 4,000 in this move. Which, as I said, should this thing just be a back test here, well, that's a big flag and doesn't seem a proportionate flag, but in theory, that is a flag and that's a back test, and there's your breakout and you move up over here. But as I just sort of said, there's a couple of reasons why it could potentially be coming down. But so first thing is see what happens with the buyers here. If we see what happens with the buyers here at say 32.80, and then they have a second go at it down here without sort of coming back up here and turning this into a range, that's the time that I'll be looking for a breakdown lower. So let's say second effort down here. And then supports, and then what are we doing? We're targeting 3200 under that. 3200. I'm going to put that settings. I'm going to say every time. Because sometimes it hits it once and I'm like, all right, I miss it, and then yeah. Anyway, point is that first target would be around the 32.80, about $30 off here. Potential bounce back up here, and then sort of drive down over here. We'll be looking for what happens with the US dollar at the same time to sort of paint this picture a little bit more. Obviously, headlines to do with China as well and the trade wars. Okay, and on to the other metals. Silver. Oof, this thing exploded. Look at this. Wow, taking out these highs. We would have to go way back to sort of see when we were last at these levels. So this is on a weekly chart. Where are we? Oh, through all these highs. So we're up into this wick area, but we're going back to February 12. Wow, 13-year highs. That is insane. Look at that. Oof, look at how scrappy this thing is here. Let's get onto a time frame we can actually properly look at. So this thing has been an absolute nightmare. I haven't traded silver much. I've traded some little scalps around here. I got stopped out for the last one. Where was it? Oh, this one here. This one? I don't know. It was down here because it was the end of last week. That's right. I took a small position here, or here actually, but sort of coming down into it, and I was just like, oh, look, we closed out underneath here. This will be great, and I thought this was the place. This was what I was looking for, and it didn't. It obviously didn't. Went up, and I got stopped out. I don't know. I think around maybe sort of 33.50, 33.60, maybe I don't know. So somewhere in this sort of big resistance area here, and I mean, that's a win for me. In him, if you're going to take a loss, that's the win for me. Because I took the loss, as I said, around here, and that thing then moved up another 8%. That's insane. That is a massive, massive move. And you can see it really, I thought that this area may have turned into a range because of all this scrappiness back over here, but it didn't really sort of think about it at all. It just sort of consolidated near the highs and then exploded again. Now, from what I understand, this is more driven on the idea of China with some rare earth restrictions. Actually, give me one second. I'll see if I can find. Um, was it just here? So yeah, I mean, not that this is directly. This is more about the German auto manufacturers or something like this. But point is that this was one of the headlines on the Thursday, and that which sort of saw that thing. So was it Thursday, Wednesday? I don't know. Anyway, sort of really sort of kick on a little bit more. Now, obviously, silver isn't a sort of rare earth material, but metals as a whole got an absolute sort of punch up to the top side. This is something that I attribute a little bit of that Aussie strength, despite US dollar obviously still coming up to as well, because obviously Aussie is a commodity currency, so commodities doing a little bit better. You're seeing this thing move up here a little bit. You're seeing Aussie sort of have some sort of reason to sort of hold up there a little bit more, but this thing absolutely exploded to the top side over here. So yeah, not really too much to say. This was a headache. It was a headache. I was looking downsides, but I just jumped out of it. I had a couple little snippets through here, did okay with some little short scalps through here, got stopped out this one here, missed this whole sort of thing. So look, silver, again, it's on the back burner for me at the moment. You would think most likely you'd probably see some sort of cooling, maybe retest of these levels and then move back over here. I certainly wouldn't be buying it at this point, since it's just like, that's 10% in the week, because that's where the sort of Monday is there. So 10.5% for the week. Blew out all the tops. Maybe a thing. I did see that potentially they had also now. Let me see if I can find that headline. It's on here. I just had to search it to find it, but yeah. So I did see this come out just 4 hours ago. It's 12:53 now on the Saturday. So it just came out Saturday morning. Xi agrees to restart the flow of rare earth materials. So interesting to sort of see how silver will sort of react to this, because if that was the driver to sort of get these things to sort of like really explode higher, both of these times through here, and then if that catalyst that got that big explosion comes off, maybe you see it sort of cool off a little bit. Certainly, I would not be buying it up over here. I think potentially, if you want, there's a bit of a sort of a fade trade coming back down over here around that sort of 34 area. But I wouldn't be surprised if you see, look, obviously, look, it already took out the highs over here at first. The highs we're working with? Oh, no, here are the potential highs here. But yeah, it moved up there. There was a point, may have been this, could have been this line here that exploded back up. So as you can see, sort of like, yeah, this is just another time that we sort of traded it, exploded up to the top. Obviously, look, there's different drivers and different things moving these things, but at this point here, obviously this whole sort of run moving up over here, this came up 15%, even just for that actual one break after the last pullback, moved up 11%. Well, you can see the reaction afterwards. So yeah, it's nice to sort of think. I mean, look, this time this probably was a multiple year highs as well. This is going back to October last year. This is multi-year highs, 11% move in just that last drive up, and that got completely undone. So I would be very cautious about sort of buying this here, even though it's sort of on a big breakout level and that. Maybe it gets a retest down here to mid 34s and then sort of moves on. But I would say if that was the driver, the rare earth materials, and that's what sort of got it to explode to the top side, and now you take away that catalyst, I think there's a potential that this thing sort of comes back down here, and certainly they'd want to hold this area here, because if it doesn't hold here, as we saw just 2 seconds ago, it can really just dribble back down here and come back down to 32s. Maybe if we get back down to 32s over here, this would be the time to buy, if it undoes that whole move there. But, I mean, look, at the moment, it's obviously looking super bullish, but it was looking super bullish at this point here as well. And as you can see, that really sort of hammered that, like that actually, that whole move before it started to regain an uptrend. 127 retracement. So I'll have to do this. Maybe it's OCD, but whatever. Yeah, 127 retracement of that move there. And as I said, look, if we look at this, I just went over this, but call that the move up there. That's a 15% move. This is on the daily within, so that's 2 weeks or something. 127 retracement. Now, if this were to be the same move here, I mean, this, not saying it will, but this really takes you back down to 31, which takes you back to the yearly trend. You know what I mean? It's look, it's hard, particularly when you've got these major multi-year breakouts, to be calling these big moves to the top side here. But a lot of people, like myself, and that sort of shorted through this period here. A lot of people got squeezed here. A lot of people have been shorting here. They just had to rip out everybody that had tried to short it, through this area that didn't take bang. Because if you shorted at any point here, it doesn't matter if you shorted here, as I actually got in, this one of my better trades, shorted silver here, bang. If you short it anywhere through here, your fail-safe absolute last line is above the highs of this whole sort of drop down here. They've blown you out right now, and they didn't just blow you out because they took out the highs from October, took out, as I said, 13-year highs. They've stopped out anybody that was short. This is the time now they can actually sort of drag it back down if they want to. But certainly I would not be buying it up over here. I think if you look for the short side, you look for this daily to be taken out here. Let's go message. Let's go sort of taking out daily lower wick, and we'll be targeting first of all 3470s. And that's the targeting. I mean, look, if buyers step in here, which is in theory, breakout. Well, this one did back test here, but breakout, back test, and then move on. In theory, this is where you want the buyers to hold. It could obviously come down lower and then hold and move up. But as you saw, there's a chance that they just melt the whole thing back down because a lot of people try to buy it here, they blow them out. They try to buy there, they blow them out. So I would be looking probably more short side in that, actually, to be honest. But for the time being, I'm probably going to sort of hang tight on this. If we see a move underneath this this week, where we put the alert just here, then I may have a little bit of a sort of a shot at a sort of downside move. But see if this thing fizzles out. Yeah. All right, move along. We've got copper. Copper, another one that sort of did well off the rare earth things, and actually came up here and closed that gap. Now, it didn't go back because this is all-time highs, that capitulation top. I've covered capitulation tops before and this was a great move down over this side over here. But it closed the gap. For anyone that trades gap theory, bang, done. Market said, great, bang, they sold it off. Now we've got an engulfing sort of day. This is very much a sort of move back down over here. It's into a little support area. I think down underneath this, you see downside moves. Further cooling. This candle setup is not necessarily conducive to, okay, we're going much higher with it all. Again, if the driver is rare earths restrictions from China, and that's what got these large moves, because this was a big move here as well. It's like 5% or something in a very short period of time, couple of hours. And if that catalyst is removed, well, you could see things just go, oh, okay, come back down, but close the gap. So from a technical point, there's people will do trading to close the gap. It did close the gap. And now, they say, okay, well, the fundamentals, maybe that'll keep it running. Well, no, the fundamentals, they're not there. The landscape's pulled back again for that. There's a reason for this to sort of cool down here. So I think certainly, look, it's coming into an area that we got marked out. This was support. Buyers tried to hold it where they gave it up over here. Again, tried to get up and hold it here, unable to. If they hold this area, then fine. Yeah, we can move back up and we can look to fill this wick. But certainly, if you don't hold this area, then I'd be looking back down over here. First targets would be these other supports down over here. Because remember, if you trade gaps, well, there's a little gap. Oh, mate. No, there isn't a gap here. We closed it on that day. So that goes to show gap theory. Boom. Anyway, if we break through here, looking at 470, which is a significant little drop off from the spike high, because of course you can close the gap, and if you come back down here and you go to those supports, that's a 7% drop, or nearly 8% drop. But yeah, I think that sort of potentially we could see this thing dribble back down here. Again, look, it could hold it. In theory, it would hold this and then move up here. But we'll see how this one sort of plays out through the week. And China, finally, to finish off. 58 minutes. Cool. So this one has been a nightmare. But we had the negative divergence. We saw it sort of move up and, okay, hit our target. I wanted to see it come back here and the buyers sort of keep the pressure on. Obviously, that didn't happen. And this is a good indicator because if you look at sort of like, and it doesn't mean that, okay, it's melting down over here, but this candle set up here where you've got strong breakout, blue with the top wick, and then the first day went negative down underneath here. Look at that candle set up. If you go back onto copper for 1 second, that's set up here. Wick top, small blue candle, bigger negative, most likely you see continue down there. Look, it's not guaranteed, nothing's guaranteed, but it's just something to think of. So in terms of a daily on this though, well, look, it's broken to the top side, found resistance where we kind of thought it was. Okay, that's fine. We expected the market to sell it from here, and it did. It just happened to sell it a lot harder. So it's come right back down, test the lows over here. Top side of this falling resistance, closed relatively positive. But again, look, this thing's moving down. We're not seeing the RSI sort of show this thing down over here. We're not oversold at this point. So there is buying pressure despite it sort of being back down at the lows. So I'm going to move this here. And yeah, China push, that's fine. I'm happy with that. Should we sort of get a bit of a push up earlier in the week through here? So it's a bit tough, obviously, when you're in such a negative sort of kind of direction. But first thing, and this is takes you back to the very first chart that I did here with DXY, first thing to do to turn around is to stop this momentum, start to get this momentum before you get this momentum. Doesn't mean it can't, not really sort of, doesn't mean it can't break down like this. But you're not going to get generally, I mean, sometimes you get V shapes, but as you can see, coming down, sideways, move up. Come down, sideways, ranging gives you a chance to put a bunch of stops over, a bunch of stops over here to use for fuel to get you back up the top over here. Oops. Get rid of that. So where are we at here? We've put in a new little lower support down here. Get rid of this thing. It's not really working with us. And we can see stepping down with the levels here. So really, this is a kind of a little bit of a support through here. Obviously, look at support, resistance now. If you break above and reclaim this, a second tap into this level here, I think is potential for it to sort of move through. And this goes in line with the potential for US dollar buying. If we see DXY run, get a bit of a squeeze, you're going to see it happen on the other markets. You're going to see it happen against the yuan. And if it's happening against the yuan, you're going to see Aussie come under a little bit of pressure because Aussie likes a stronger yuan. So in this case, this is US dollar against CNH. So, you know, that's a stronger yuan is moving down. So if we see US dollar strength, yuan weaker, that's going to weigh on Aussie, making it harder for Aussie to have a bit of a breakout. It also is a bit of a proxy for gold as well. And if we start to see this move up over here, potentially that is going to sort of weigh on gold coming down a little bit lower as well. So a little bit of cross-chart confluence with all that stuff. And just as a last little one, gold-silver ratio really broke down hard this week. So this is what we're looking at. This is the zone. We sort of obviously had a support support. So look, once we come under here, we're moving down. And it just crashed down over here. Nice little back test, and then boom, boom. This is a beautiful break. Back test, lower low is your confirmation, and they just dumped it. And obviously, we saw silver absolutely fly out there. So it's gold silver ratio. I thought it might have actually. I sort of thought, oh, he's a little bit of a zone three. It's not a major one. This is probably what you're more looking for. This sort of gold dotted line here, which is actually sort of potentially sort of going to be coming into effect soon. But it is back testing the top side of this range that we were in, which felt like forever at the time. This is on a daily. It looks very small in the scheme of everything here, but it was a big resistance, big resistance, big resistance. And obviously top side of this range for quite a while. Breakout, now we're back here, back testing it kind of over here. So this could potentially come into this. Come into this and see some sort of reaction up like this, and that would probably go in line with the idea of potentially seeing a little bit of a cooling with silver. Typically, this chart moving down is more bull market for metals because silver will outperform gold, hence gold-silver ratio, silver stronger, so pushing down. But if we start to see this thing move up here, that could sort of hold gold up a little bit, but it doesn't mean it's necessarily going to be doing sort of spectacular things. But more to the point, you probably see silver cool off a little bit around this zone. All right, that's it from me.